Hi guys, welcome to the new video. Today I just wanted to make a video to show you how you don't need to trade daily and you don't need to open 1 or 2 or 3 trades per day like I see online a lot of people do. You actually only need 1 trade a week or even 1 trade a month if you really know how to position yourself. I'm super sick. I just wanted to make a quick video because I want to keep posting as frequently as I can. So I'm just gonna go straight to the charts. In this video I'm gonna cover 2 trades that I opened. One was yesterday and one was today. Both trades are happening on Bitcoin because, as you can see, Bitcoin is pretty volatile lately, so it gives you a lot of good price movements. So for the trade from yesterday, if you look at the chart just like this, where would you first say that there is a lot of liquidity on the chart? And if you said below this order block here, that's the correct answer. And why am I saying that? Because as you can see here, this order block had multiple reactions here that caused price to go in the opposite direction. So for me, I can confidently say that there is liquidity below this order block or below this line here. I usually put this pink. And what I was doing, so basically the whole weekend the price was chopping, and my first idea was to try to take short from somewhere here up to below this level, but I didn't really get any proper entry. I was trying here, I was looking, but like the price just kept bouncing up again, so I didn't manage to get any shorts, and then the price went finally down and swept that liquidity. So if you watch any of my videos from before, what I say usually when the price sweeps the liquidity below or above swing highs or whatever area you marked, you have to look for the reaction. So if it's going to be acceptance or rejection. So as you can see here, we went below and we had a close below that level, right? But the next candle pushed back to the range, and then as you can see, we started consolidating here, and right here we got a change in the state of delivery. Now this change of state of delivery also happened to be above this fair value gap, and then as you can see as well, this bearish fair value gap was overtaken by bullish fair value gap here. Boom. Which means that now the buyers are kind of marking sellers territory, and they're like, we are taking over from here. So now this in bearish imbalance is marked with a bullish imbalance, and for me this is enough confirmation to place the trade here. My stop loss was going here, and then for me usually I look at the opposite side of chart to find another liquidity, and as you can see here, this level here for me I marked. Boom. Why did I say that? Because again, 1 reaction here, 2 reactions, 3 reactions, and it was obvious that there is liquidity above, and on top of that there was 2 hours fair value gap, as you can see here. Boom, 2 hours fair value gap above that liquidity, so which means that we have a liquidity on the opposite side and we have a point of interest. So I was targeting 50% of that thing, and that was 2.23 RR, and as you can see, the target was hit easily with no drawdown at all. Now for the second trade is gonna be almost identical to the first one. It's just gonna be on a small scale. So as you can see here, order block, as I already mentioned, we took liquidity above it and we went to take the opposite side liquidity. So this on a smaller scale here, the same thing happened. We had an order block here, we went up, we came back down, we reacted off of that order block, and then we went to the opposite side, taking some liquidity here from the highs. And then once we took the liquidity from the highs, we went back down, again reacted off of that area, and then finally we broke that order block here, this level here. Now one more interesting thing about this price action is that we started making a trend line here as well. Now I know that a lot of people don't trade trend lines. I do trade them, but I don't trade them like, oh, as soon as we broke the trend line it means that we are going higher or whatever. I just look at it as a level of liquidity like any other level. So if we accept above that level, I'm happy to open the trade, and if we reject above that level, it means it's liquidity grab and we're gonna go in the opposite direction. So as you can see here, we had a liquidity grab, on the sell side. Then we made a change in the state of delivery here, boom. We broke that trend line, and then when we broke the trend line, we also made a fair value gap here, boom. Put this OB, and then this is where my entry was. So I entered, my entry was here, and then I put my stop loss below the level here. I'll show you in 5 minutes, there is a wick here. So I put it there, and then for the target, I went to the 5 minutes, and then I saw this level here. So basically, when we took this level of liquidity, for me this is gonna be some kind of liquidity block, and it's gonna be some kind of reaction from this area. It doesn't mean that we're gonna change the direction and from here go straight down. We can break that level, but I know it's gonna be some kind of reaction. So for me, I was happy to find an order block or fair value gap within that liquidity block, and as you can see, I marked this order block here, and that was my target. So if I go here, boom, 50%, a little bit lower usually, and then as you can see, it's going to be 1.2 something. As I told you, there is a here actually, this was my stop loss here, and boom. Now you can see that this was a little bit stressful trade. I opened it here, and then I left the chart, and then when I came back to look for the trade, I saw that we were here already. Now, what I used to do before, a lot of times I will just close the trade when we reach to some level that's close to my stop loss, but thank God, like lately I've been really respecting my own decisions and practicing the discipline. So I was like, I'm not gonna close the trade, although even if we come here and whatever, because I saw these two relatively equal lows here, I was like, the price may come down and take them, so I'm not gonna close my trade until we take this wick here. So luckily we took that relatively equal lows, and then we started pushing in the opposite direction. As soon as I saw that we took this high here, I knew that I'm safe. So we went back and we reached my TP level. So as you can see, these two trades can be literally trades for your whole week, a month, or whatever, depending how are you trading. If you really position yourself good and practice the patience, you're gonna be able to trade as least as needed. Like, as you can see, 1 trade, 2 trades. This was Sunday, this was Monday, and you can be done for a week. Now, obviously, you can trade every day and make as much money as you can, but you need to be able to recognize the good setups, because these kind of setups don't come every single day. Because as you can see how long we were accumulating here for me just to wait to take this liquidity so I can open the trade. You know, so I had to wait for like probably 3 days. I think this was 3 days, 2 days. Okay, I was waiting for 2 days for this liquidity to be swept so I can open the trade. But sometimes it can be day after day, like here. Sometimes it will be once per week, but these trades are very high probability. So if you take only setups like this, I'm sure that you're not gonna have less than 75 to 80% win rate. So as I said, this can be everything that you can do for a month. So yeah, I'm not gonna take a lot of your time. I wanna go back to sleep for another 12 hours because I'm sick as fuck. So thank you for watching the video, and I hope that you learned something. And if you have any questions, please leave them in the comments. Thank you for watching.